Hello and welcome to Options Guide TV. My name is Brian Overby. I am the author of the Options Playbook, and I will be your host for about the next 20 minutes here on Options Guide TV. So to start with, UNH, wow, boom, there it happened. Warren Buffett decided that he wanted to buy, well, I should say Berkshire Hathaway. Warren has finally retired. He's finally made enough investments to be able to retire at age 91. So good for him. I wish he would have started investing earlier so that he could have retired a little bit earlier, but that's all right. He did just fine. So as far as UNH is concerned, Berkshire Hathaway came out today and said that they have bought $1 billion or so worth of the company, and the stock is up 11%. But what's real interesting to me is the implied volatility is just skyrocketed on the shorter term options. It's trading up around 100% on the at the money implied. And normally it trades right around 38%. And actually it's a little bit lower than that overall, but United Health has been in the news quite a bit, and the stock has just got pummeled. So stock looking strong today, vol there. We've been doing at the money butterflies in the SPX, and the last two of them on a daily basis, we have done fairly well on it. So you got your crazy hat on today. I want to do two of these trades. I want to do two 0 DTE butterflies, and one of them is going to be in United Health. And as promised, we're going to go and look at another one in the SPX. Like I said, going all the way up to the holiday weekend, we're going to do one every day. We're going to do it at this time, and we're going to close it out between 2 and 3 o'clock in the afternoon and see where the market's at. And we're just going to use the very scientific forecasting tool as, is the SPX up or is the SPX down when we put it on? So if it's down, we're going to do it with puts and be bearish. And if it's up, we're going to do it with calls and be bullish. And the last, I think, 4 that we've done, one of them we definitely lost on, and the other 3 have been profitable and decent profitability too. And in other words, all you need is the market to stay within a range. And if you get the direction right, you're still profitable. And that's the way that we're going to look to do the trade. Implied volatility does matter. It matters a ton on these trades. So very weird to see United Health without an earnings report, without a major news headline, to be trading at 100% implied volatility on the at the money option contracts. And I better shut up and get in there and start selling some of that premium. And even though we're doing a butterfly, to me, we're still selling premium because butterflies want high implied volatility when you put them on, and they want 0 implied volatility when you take them off, if you're correct on your forecast. Okay, so UNH is up today, and I'm playing around with it right now. Let's run to the oh man, that thing just jumped. Okay, 303, 302. I'm going to send this one to the skip strike butterfly. I'm sorry, to the what if calculator. And skip strike, that was weird. But here is the butterfly that if we did it in this direction, we were profitable. But I talked way too long on the introduction. So let's flip it around. Let's get bullish on it. Okay, so we're up 32 today. I have a feeling we're just going to hang right here. We're up about 12%. That's about what it was up overnight. And if we go to the chart and we look at the chart, look at this falling knife that's attempted to be grabbed. Kind of crazy on the downside. So I'll zoom in and I'll show you that we're kind of in this area of noise on the bounce back. So realize that this is the candle here today, and look at all the noise that's right in this area. Here's the precipitous drop down. Here's the breakout to the upside, catapulting above the 20-day and the 50-day. But look at it, it's just like right there, right where all of these candles are at. So my guess is that it's going to stay there, but we need to get the trade on. And like I said, with dailies, the fact that it's 11 o'clock Eastern time right now, we should have did this a half hour ago. Maybe we need to adjust the show so that we can do more dailies and start at 10:30. But with that said, I should say zero DTE. That's the way to think about it, right? Zero DTE is the buzzword nowadays. So this one leans to the downside. It was literally, when I started the show, it was $4.58, and now it is $6. And I did it that way because if it went down, you would have still been profitable. Okay, so now I don't like that trade. Let's flip it. Let's get bullish on it. We could just do a butterfly, but now let's get bullish. Let's do it this way. Okay, so we're going to go 10 points from here. So 305 down to 95. We're going to sell 2 of these. We want to be able to get this done for less than $5 if we can. $5.50. All right, so if you put this in and the market goes up, we would lose 68 cents. Like literally a half hour of time decay is so big when vol's trading at 100%. So see the zero line? We're just a little bit below that zero line on this trade. And I've already executed a couple of trades in my own account this morning. Part of the reason why I'm a little rushed, honestly. All right, we might be able to, if we go this way, 7.5, 2.5. It's going to jump quite a bit, though. All right, let's adjust this one. See if we can get it done where we'll pay a little bit more, but we're profitable if the market goes up. This might be. We'll send it to the what if. And if the market goes up, yeah, we got a small bit of profitability, but we're putting some real money at risk. Market's got to come all the way down to 295. Let's run over and look at the chart. Let's see where 295 is at. I'm going to zoom back in on that chart. We're all the way up here. 295 is here. We got the 50-day. All right, let's do it. This is it, because I do want to say that if the market does go up, I do want to be a little at least profitable on the trade. Even break even would have been fine. But now this is moving 621. Let's call it 621. I would put it probably in at $6. Back to the what if. Man, this is moving. Saying we'd be up 89 cents, but what did it grab? The maximum, the difference between this strike and that strike is 10 points minus 2.5. So we're talking about 750. So if it's 650, you're still got a chance to make $1 on that, right? Okay, so 305 minus 295 is 10, minus 2.5 is 750. Yeah, it should be trading for 750 if we get to there. We can make 10 and lose 2.5. All right, that's going to be the official paper trade. 621. We're going to say we put it on that. Annoying, man. Both of those trades. If we would have did them both right now, we would have been up $1 on each of them. Okay, so time decay is going to be huge. We're at 11:11:16, right, and 16 seconds. 11:11. That's perfect. There you go. You can't. How can we miss out on that trade? We entered it at 11:11, and right now it's 660. We'll say 660. Okay. 660 on the trade. That'll be the official paper trade. I went jump down, but I'm not okay with that fill. I just want to let you know that, but we're going to say that that's our fill today, and we got to get going because we got to get our other trade on too here. Relative to this, we got to go look at our SPX trade for today. And oh, by the way, if you do have any questions, please do put them in the chat box. We want to make this as interactive as possible. Say hello. Let us know where you're at. And we'll be happy to try to address any questions that we can do. But by the time we get through this trade today, we won't have any positions on for Monday. So we'll start anew on Monday morning. So let's look at SPX. Let's pull it up. Market is down, so we're going to ride with that theme. And we'll go, once again, 10 points wide. We like it to be at the money, as much at the money as possible, and we're fairly close to that. So here's the one that we're going to buy. We're bearish because the SPX right now is down. So we're going to do a bearish 1 day or 0 DTE butterfly. We're going to be buying the 64.65 strike. We're going to be selling the 64.55 strike. And let's sell that twice. Okay, I've got 2 of them in there. And then we're going to only go down 5 points on this one. Not bad. We'll take that. 360, 365 right now. Let's say 360. I think we could get filled at 360 on this pretty easily, actually, the way it's jumping around. So $360 is going to be our risk. And that means that we will be profitable if the market goes down below 64.50, which is our lowest strike in our open wing butterfly that we're putting on. Let's grab this one more time. And so the market is right. Oh, market's moved a little bit. 64.60. Oh, here's the last trade. Okay, this is it. 64.55. I like that. So this is right where we're at. We're putting it on with the market almost exactly at the money on our short strike, which is right here. $6,455. We're risking $360 per 1x2x1 open wing butterfly. If the market goes down, this is saying we'd be up $125. But we're going to put this trade on, and by 2 o'clock, we'll be out of the trade, somewhere between 2 and 3. That is when, and I've always talked about this on all of every time we put this trade on, that is when, in my mind, Delta and Gamma take over on 0 DTE options, and it's no longer about Theta. I feel that basically from 10 o'clock, when I think about putting these trades on, from 10 o'clock until 1 o'clock is all about theta decay, especially in the SPX. SPX holds its premium so well until it doesn't. And that it doesn't period is usually from 1 o'clock until 4 o'clock Eastern time going into the close. So if I'm profitable on something, if the market is hanging right at my short strike, hanging right here, I don't mind hanging around a little bit, but you're not going to put this trade on and go golfing, right? You're sitting here, you're going to watch it. If you put the trade on and you get to 1 o'clock or 2 o'clock and we get outside of the wings, we get outside of a break even, actually, I would even say on the upside here because we're doing puts. But we get outside of this wing, we're fine. But we get somewhere in this range, right in here, we just want to get out of the trade. We don't want to get the max loss on this trade, the full $360 when we put the trade on. And so far, I think we're batting about 600 or 700 on our trades. And I'm going to put them all together in one slide. And then for the holiday Monday, where the market is going to be closed, I'm going to do a presentation on the profitability or not profitability. I'm not going to fudge the numbers. I am not following this trade every single day, in that I'm just sitting here staring at it. But I do go in and I take a screenshot at about 2 o'clock and see where we're at and see if we can adjust that trade, because I'm doing this for the show. That's straightforward. Any questions that we have on it? No. All right. So let's go back to UNH, because that trade is explosive. Long butterfly in UNH. We did that ones with puts. Let's look at the call side of things. I think I like the call side better. This is going to be the official paper trade. If I didn't adjust that strike, did I? Send a ticket. That's the standard butterfly. We need to knock this back to on the call side. This is that's 10 points, and this is 5 points. It's trading for $6. So we went down to the 307 and a half. Okay, that's it. I need to send that to the what if calculator. That's the trade, and we are already up. It's $7 now on the trade. 306, 305. So this trade, you could easily be out probably by 1 o'clock. maybe even noon. Where's vol trading at? Let's grab it from the what if, and let's send this one to the ticket, and we'll watch it live. Very rare that you're going to get a situation in a stock like United Healthcare Group where, look at vol. Vol is even higher now, but it's going to start to break down. 104%. Normal vol's around 38%. This vol, you're getting this ton of juice. Stock is now up 12%. 306. We need it to hang around 305, but if it continues on up, we're in the right direction. We needed to stay above 295 plus, what did we pay? 660, I guess. So we needed to stay, we'll call it $6. We needed to stay above 301. 295 plus 6 would be $301. And that's about where the break even is at. So as long as we stay above that, this trade is profitable. And a huge amount of time decay on the trade. 682 right now, 693. Yep, I like that trade. Good, clean fun. All right. Well, that's going to be it. I see no comments or questions. Nobody wanted to play in my reindeer game today. United Health was an opportunity. When I saw the vol, as soon as I woke up this morning and the markets were rocking and rolling, and see implied volatility in a stock like United Health being up around the 100 level, even the August 22nd expiration is 52% implied volatility. Now, this has to come off. I mean, there's no, we're in an up market and implied volatility is skyrocketed. It's just got to happen, right? Selling out of the money put spreads. If you don't mind buying it, but remember, if you get put some stock at $300, you're buying $30,000 worth at 100 shares. And in my account, I sold some put spreads, and I want to give actually a call out to Sense of Market because I was in their site and they're part of the members of the Tradier Hub, and they highlighted the fact that in United Healthcare, a lot of the insiders and like big insiders, like CEO, president of the company, had bought hundreds of millions of dollars of stock, not even at the lows, kind of they're buying the dip, trying to catch a falling knife. But if we go back and we look at the chart on United Healthcare, I think that those buys were somewhere in this range. It wasn't even down here at the bottom. So there's still a lot of confidence, I should say, by the insiders, and they're willing to actually put their own capital up because they were purchases, I don't think they weren't exercises by shares given to the company. And so then the stock came all the way down, and Warren Buffett said, that's too low. That's too low. It's trading at a PE of $10 right now. Even though the news has been bad, but it's kind of one of those too big to fail scenarios. They'll get it all figured out eventually and get a slap on the wrist, and then they'll start rocking and rolling again. So look at this gap. If we can get this gap filled, we're right at this 300 level. I still think this is the most interesting area of the chart right here. But you fill that gap, you're all the way back up to 378. So moral to my story, because of that, and because of that insider trading news, I actually took a position in United Healthcare, and I sold some more put spreads today. I didn't actually sell the puts outright, but I did sell the put spreads because I am a little bit nervous on the downside. I wanted to hedge, but if the stock comes down and I get put it, I will buy a few hundred shares more. I'm willing to do that in United Healthcare, and I did have some dry powder that I was willing to commit. Long story as to why, but we'll leave that there. No questions, no comments. That's it for this edition of Options Guy TV. We'll come back on Monday. We'll see how our SPX trade, our 0DT SPX, would be 3 for 3 today if we end up making a profit on that trade. The United Healthcare trade, I do definitely like this. Even you look at a trade and you say to yourself, yeah, I'm going to put this trade on. And even if you lose on the trade, you're like, yeah, that was a good trade. Because that's what I think of this United Healthcare 1 day, 0DT, half a day, zero DTE butterfly that has 3 different scenarios that it works. If it just drifts down a little bit, it's okay. Stays where it's at, it's great. Drifts higher, it's fine too. So there's only one scenario where it gives up a lot of the gain today where you're kind of scared. Thanks for stopping in. We'll see you Monday, 11 a.m. Eastern time for the next edition of Options Guy TV.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.